What is factor investing and when does it actually make sense to use this strategy? I'm Giacomo, founder of Awalyt, a portfolio analysis platform built to help investors make decisions based on data and not emotions. Check the link in the description if you want to analyze portfolios, ETFs, and monitor your investments. Now, let's get into it. So, first question, what is factor investing? It's a way to build a portfolio that targets specific trade stocks have in common, like low valuations, strong financials, or recent strong performance. A factor ETF is simply a fund that selects stocks based on one of these traits, automatically. The 5 most studied factors are these. The first is value, buying stocks priced low compared to the company's earnings, what we call undervalued stocks. The reasoning is that when you pay less for each dollar of earnings today, you tend to do better over the long run. The most common value ETF is VTV. The second is momentum, the opposite approach. It buys stocks that have shown strong price gains over the last 6 to 12 months and sells the ones that have been falling. The reasoning is that recent winners tend to keep winning, at least for a while. The main momentum ETF is MTUM. The third is quality, buying companies with strong financial fundamentals, like stable earnings, low debt, and high return on capital. And the reasoning is that financially solid businesses tend to produce usually more reliable returns over time. And the main quality ETF is QUAL. The fourth is size. So, buying small cap companies rather than large cap ones that historically have delivered higher returns than large caps over the long run, but with higher volatility along the way. A common ETF in this space is VBR. And finally, the fifth one is low volatility, which is the most counterintuitive of the 5 because the idea is to buy stocks whose prices swing less than the broader market. So you'd expect lower risk to mean lower returns, but historically these calmer stocks have delivered returns close to the broad market with much less risk along the way. The main low volatility ETF is USMV. So when does this strategy actually work? Factor investing makes sense if you actively study the macroeconomic environment and connect each factor to the current economic cycle. Historically, factor strategies have done better than the broad market over the long horizons, 15, 20 years or more, but if that's not how you invest, you're not really applying the strategy. In the next video of this series, we'll go deeper on a specific factor ETF, Momentum, the one that actually beat the broad market over the last 12 years. If this was useful, subscribe and follow the series. Full article with all the data is linked in the description. See you in the next one.